$1.1 billion gone in 24 hours. Not hacked, not stolen, just wiped out by the market. Bitcoin dropped below $59,000. US Bitcoin ETF saw almost $692 million leave in one day. And more than $10 billion in Bitcoin option expired at the same time. So if you are wondering why Bitcoin suddenly dropped and why so many traders got destroyed, you need to understand one thing: options trading. And here is the scary part. Most people hear the word options, but they do not really understand what it means. They just see people online making money and they think it is easy. But this week showed the other side. In this video, I'm going to break down exactly what happened to Bitcoin, what ETF outflows mean, what options trading is in very simple English, why 1.1 billion got liquidated, and most importantly, what beginners need to understand before they touch leverage or options. And stay with me until the end, because I will give you my honest opinion on whether beginners should ever trade options in crypto. Let's get into it. So first, what happened? Bitcoin fell below $59,000 and that scared the market. But this was not just a normal red day. There were three things happening at the same time. Number one, ETF outflows. And number two, options expiry. And number three, liquidations. And when all these three hits all together, the market can move very, very fast. Let's start with ETFs. Bitcoin ETFs allow investors to get exposure to Bitcoin without holding Bitcoin themselves. So instead of buying on an exchange, some investors buy shares in a Bitcoin ETF. For a while, this was very bullish because ETFs were bringing big money into Bitcoin. But this week, the opposite happened. Almost $692 million left the US spot Bitcoin ETFs in one day. In simple English, big money was selling. And when big money sells, the price feels pressure. Think of it like water in a swimming pool. When ETFs are buying Bitcoin, they are filling the pool. But when ETFs are selling, they are draining the pool. Less buying, more selling, price goes down. But ETF selling was not the only problem. The second problem was option expiry. And this is the part most people do not really understand. So let me make it very simple. So the thing is, you are not buying Bitcoin directly. You are buying a contract based on where you think Bitcoin price will go in the future. There are two main types. A call option means you think the price will go up. A put option means you think the price will go down in the future. So if you are right, you can make money. And if you are wrong, the option can expire worth less. That means the money you paid for the option is gone, completely gone. And this is where people get trapped because they think I only pay a small amount. But when millions of traders are doing the same thing and the market moves against them, the losses become huge. Now, this week, more than $10 billion worth of Bitcoin options expired. That means a huge number of bets all came due at the same time. And when Bitcoin was trading below $60,000, many of those bets were in trouble. And some reports said around 80% of those contracts expired worthless, means they lost everything. So imagine thousands of traders making bets and suddenly most of those bets are gone, like because they bet on the wrong thing. That creates panic and traders close positions and market makers rebalance. Some people sell to cover the losses and the market becomes very volatile. This is why options expiry can make a bad week even worse. And remember the question I asked at the beginning: should beginners even touch options? I will answer that honestly at the end. But first we need to talk about the thing that really wiped people out: liquidations. And by the way, if you are finding value in this video, please subscribe. It takes 2 seconds. Thank you so much. Now let's get back to it. Now let's talk about liquidation. This is the part that hurts traders the most. A liquidation happens when someone trades with borrowed money. That is called leverage. So let's say you have £1,000, but you use leverage to trade like you have £10,000. So if you are long on the trade, if Bitcoin goes up, your profit is bigger, but if Bitcoin goes down, your losses is also bigger. And if the loss gets too big, the exchange closes your trade automatically. You do not get to decide. You do not get time to think. Your position is closed. That is a liquidation. And in 24 hours, more than $1.1 billion in crypto positions were liquidated. Most of them were long positions. That means many traders were betting Bitcoins would go up, but Bitcoin went down. So the exchanges forced them out. This creates a chain reaction. Bitcoin drops, levered traders get liquidated, their positions are forced to close. That creates more selling pressure. Then Bitcoin drops more. Then more traders get liquidated. That is why one bad move can turn into a big crash very quickly. And this is why I always say, leverage is dangerous. Options are dangerous too, if you do not understand them. And beginners should not treat crypto like a casino, because the market does not care about your feeling. The market does not care if you are new. The market does not care if you need the money. If you take too much risk, the market will punish you. Now, does this mean Bitcoin is finished? No, Bitcoin has had many painful drops before. Bitcoin has fallen 50%, 60%, even more in previous cycles. And every time people said it was over, it's finished. But the question is, are you using the right strategy? Because long-term holders and leveraged traders are not playing the same game. A long-term holder can survive volatility. A leveraged trader can get wiped out in one candle. That is the difference. So now, should beginners trade options? My honest answer, no, not at the beginning. Options are not evil. Professional traders use them, institutions use them, and some people use options to protect their portfolio. But beginners should not start here, because options require timing, risk management, emotional control, and this is very important because new traders, they don't control their emotions at all, and deep understanding of how markets move. Most beginners do not have that yet, and that is not an insult. This is just reality. If you are new to crypto, start simple. Understand Bitcoin, understand self-custody, understand risks, understand why the market moves. Do not borrow money to trade. Do not use leverage because someone online made it look like it's easy and they're making millions. Do not trade options until you know exactly what you are doing, because this week showed the truth. People were not hacked. They were not scammed. They took too much risk and the market punished them. So here's the simple summary. Bitcoin dropped below $59,000. ETF outflows added selling pressure, and options expired created more volatility, and leveraged traders got wiped out, and over $1.1 billion disappeared in 24 hours. And this is why education matters, because if you don't understand the game, you become liquidity for smart people. So did you understand option trading before this video? And are you holding Bitcoin through this dip, or did this move scare you? Tell me in the comment below. And if this helped you, subscribe and follow me on X and join our Telegram community. All links in the description below. My name is Lamia. Thank you so much for watching, and I see you in the next one.